Okay, guys, it's okay. Let's begin today's session. So someone actually mentioned if we have to always buy at discount and sell at premium. Oh, what's going on? Okay, someone mentioned if we have to always buy at discount and then sell at premium. And I said not all the time. And the person was saying that I should explain. So I had to schedule a session so that I can explain to you guys that you don't always do this before you buy, and you don't have to always wait for price to get to premium before you sell. Like this buy structure, for example, now there is a scenario where you have to wait for price to get to the discount level before you buy. Let me just mark this thing out. You don't have to wait for price to come in here. From here, you can still buy. Now, how do you achieve that? So there's something called I call opposite supply and demand zones, or let's say opposite key levels, like that. So let me give you a textbook example now of what I'm trying to explain. Let me make sure you guys are still hearing me. Hope you guys can still hear me. I'm not breaking, right? Okay. So as I was saying, there's something called opposite supply and demand or opposite key level. For example, this is a 4-hour time frame we're trying to draft out here. Let's say price sweeps to inducements, break structure at this level here, pulls back, mitigates, let's say mitigation block, does something like this again. And now we have a change of character. Okay, let me draft it out well. Okay, let's say with price took out inducement here again and broke structure here. Then now we have a change of character here. That's change of character here on the 4-hour time frame. So now this is the 4-hour current structure and it's bullish, isn't it? Now when price is somewhere at this level here and you look at the opposite side and there is no demand or supply sorry, not demand, there's no supply zone here. If there is no supply zone here, then we can actively buy. If we see um if you see an entry here, a buy position, you can actively buy from here. You don't have to wait for discounts. But if there is a supply zone here, even though it's not in line with the current trend now, since price has changed character and is bullish, if there is a supply zone here, expect price to still react from it. For example, like this particular drawing here, this is a clear supply zone. This is a mitigation block, or let's say breaker block. This level here. This can be your inducement. That's how some people actually get trapped in something like this. They'll be taking a sell from here, not knowing that price has changed character. They'll be taking a sell from here, and price will not take out this low. It will just react and come into this area, something like this, and then buy. So like price will just react from here, maybe come down a little bit and then buy and take them out. Maybe if they did 1:5, 1:3, it will work out for them. But if they're targeting this low, then they will get stopped out. That's exactly what happened here. So there's a opposite supply zone where price is likely going to react from, even though price did not react from it before, it's still valid, even though it's not going to take out the external range liquidity. So price is going to react from here, then you know that we are definitely going to come into the discount level. Now, what do you do with something like this? You can decide to take lower time frame entries from this area here. This is the 4-hour time frame. You can use 1 hour or 15 minutes to now take sales from this supply zone into the discount level. Once you get to equilibrium level, you stop selling because price can react from any demand zone here. Then price comes into the discount level and then buys. So if there's no supply zone, let's say it's like this now. So there's nothing here. Let's say maybe just a fair value gap. Even fair value gaps work. Price still reacts from fair value gap. So let's say there is no supply zone here now. Then you see a lower time frame, or let's say a buy position from here, or even want to take mitigation block entries, like use this breaker block. Sorry, since it's a change of character, you want to take a breaker block entry here. You don't have to wait for price for it to be at discount level. You can now take your breaker block entry here and buy. Now here, price did not get to discount level, but you still took a buy position. So same thing applies to a bearish market. Let me start with the buy. So let's say there was a buy, price took out inducements, broke structure to the upside, put back a little, went up, took inducement again, broke structure. The price decides to change character here. Price decides to change character here. So with this illustration now, when price has changed character here, if you see a continuation entry to continue selling, you can actually take it from here. You can take a sell entry that you may see or breaker block and sell from here. But if there is a a demand zone, an opposite demand zone, like price now reacting from this place, you can check your charts. You see, we'll still check the live charts though to see some examples. So if there's an opposite demand zone here, you expect price to react from this. Now, price may not actually take out this external high. It will just come into the premium level, then still sell. That's why all these pullbacks that you would have actually bought from if price was still bullish, they are still valid even though price has changed character, but they are valid for retracements. In this case, they are valid for retracements. So let's check the live charts. You can't see my screen, okay? Is it just you? Because is my screen clear or am I breaking? Okay. So let's check the live chart now to see some of these examples. Which pair are we going to use now? I need something that has actually shown us this example. Okay. Let me use. Okay, now. So, like I said, even fair value gaps too, price also reacts from fair value gaps because there are also places that need to be filled. Okay, so like for example, now this card CHF now, before price decided to rally into the discount level now, so people may have been taking buys from this area here now, using it as mitigation block, and you see how price reacted from it. Now, because there is an opposite fair value gap here, price reacted from it and came into the discount level. So anyone that was buying from this mitigation block here definitely got stopped out. And price has to actually come into the discount level because there is something price is reacting from the opposite side. Now let me look for a perfect example that shows that you don't have to wait for discount or you don't have to wait for premium. Let me check. Hmm. EU. I think EU did something like that today. Okay, no, this one is still discount level. Okay. Okay, now look at this EU chart here. Okay, let me check if there was an opposite whatever. Okay, there was none. Now look at this EU charts here now. This is actually the daily this is 4 hour time frame, but this is also a daily structure. And price broke structure here, isn't it? Now, inside this main 4 hour structures, there are still internal 4 hour structures. You can see how price took out this low here and broke an internal structure before breaking the main external range liquidity. Now, this particular level now is not discount, it's still at premium, but price bought from this mitigation block here. Some people caught this on X, even though I did not, because I was not active at this particular week. So looking at this thing here now, you see that price is at premium level. So even though if, some people may be waiting for price to get into discounts before they buy, we're seeing that there is no opposite supply zone because I had to shrink the chart to check to see if price is reacting from price is not reacting where price broke structure, isn't it? If you look at the opposite thing, there is no supply zone at that area there. It's just a normal pullback. It's not a supply zone. So price is not even going to react to it that much. Then you can now take your entry, a buy position from a discount level, and you still be profitable. So for something like this now that the mitigation block is actually very, very large, you can decide to do 50% entry or use the second mitigation as your entry. That's when price mitigate the first one, then you do second one. Using the first one as engineered liquidity, then you take your buy and still target where you want to target. Now, after price did whatever it wanted to do, if you measure from here, that's this swing leg. And I see that price has come into discount. So let's check where price is reacting from. Let's check where price is reacting from. You can see that price just took out this pullback from this end and broke structure. And it's reacting from a supply zone at that opposite end. So now with this particular information, you know that even if you see a demand zone here that you're supposed to be buying from, or let's say this mitigation block now, this one here now, price did not take out the external range liquidity because it's ready to get into the discount level. It's reacting from an opposite supply zone. So any buys that you'll be taking at premium is actually risky. So with this now, it's just easy to know when to buy at premium and sell at discount. We know that. I know that you guys have always been hearing buy at discount, sell at premium, but you can also still buy at premium and sell at discount. So it's just to know when price is reacting from an opposite supply and demand. So if on the chart now, it can look like this. Let's say a cell structure. Let me just give basic structures here now. And price changes character by breaking this high. At this point here, there is no opposite supply zone. Let's say there's no fair value gap, but there's no opposite supply zone here. You can buy from here at premium. And once price gets into this I don't even know where I stopped. I got caught out. Voila. Where did I stop? Don't understand this network wahala here. When did I cut off? Okay, when I was trying to draw the basic structure. That's this one that is showing on the chart, right? Okay, let me just okay, let me just explain this particular diagram again. Okay, like I said now, so with all I've explained, this is how it happens on the chart on any markets. Let's use a cell structure, then price changed character to a bullish structure. So now from here now, price decides to change character here. This is how it happens on the chart. Price decides to change character. As price has changed character here now, you see a supply a buy position here. Would you take it or not? It's very, very risky. Why? Because price is reacting from an opposite supply zone. This is a mitigation block, or it could probably be a support zone flipped to resistance. That price has been reacting at this level for a very long time and then decides to break it. So when price comes to the same level, what do you think is now? We are at this point, price has broken structure again, and this is just a random pullback. It's not something that you actually sell from if it was even a sell structure. Like if it was a bearish market, it's not something that you can sell from. Then you know it's just a random pullback. Price will not like react to it like that. So you can decide to buy at premium if you see an entry here. Sometimes it can be a mitigation block. Most times a mitigation block. Most of my mitigation block entries. I think let me even use gold for example. I think I was thinking of quick examples with this buy at premium. Let me use gold. Ah, So I got kicked out again by MTN. I think I should just repeat the last parts again. Where did I even stop? Did I stop at the diagram or when I wanted to check gold? Let me know which one I'll just repeat. Okay, gold. I think I'll just let me just rush the diagram. I've done the diagram already now. I think it's when I wanted to check gold that I got cut off, isn't it? I hope I don't get cut off again. What is this? So I made mention of gold. Can you guys hear me? This time no one is saying anything. The MTN has kicked me out again. I'm still active. Okay, so for example now, let me check what I was looking for. I think gold has some examples of buying at premium. Its prices don't really have to get to the discount level first. So I think I should have something that's happened in the past. I don't want to go too far. I'm still here. I'm just looking for the most recent price action. No, I'm still here. Actually, I muted my mic. I'm just looking for the most recent price action that just explains this topic. Okay, I think I use this one now, isn't it? I use this one. Let me see if I can see one more. Then we'll be done for today. But as the network is, it's not loading real quick. Actually, it is not loading. So, So I was looking for the last mitigation block entry that I took because I think it actually followed this rule of not waiting till price gets to the discount level. It followed that rule perfectly. And that's what I'm just looking for to show you. I'm not sure it's on this time frame either. I was waiting for this previous price action to load. Let me see if it's just on this higher time frame. Okay, let's see. Is it this one? Okay, this one actually still mitigated the discount level, but at least it did not come it did not come down to the extreme. And price just reacted from this mitigation block here because price did not have any opposite supply zone that it was reacting from. So it could just actually work with this mitigation block here that is even at premium. The mitigation block is at premium, but price just pierced a little below the equilibrium, if you can see closely. This is the mitigation block here. Obviously, your stop loss is not supposed to be that tight. So buying from here and just targeting 1:3, price bought from premium. And that's it. Before the network will rob me out again, let me just end the class here. So does anyone have any question? Okay, just quick question. Does anyone have any quick question before we end this class? Apologies for the whole network issues. So I will, you guys can send me. Breaker block and mitigation block is the structure. Mitigation block, for if price changes from a sell to a buy at that level where price change character, you can spot the breaker block entry there. And that's just the difference. Yeah, and there's no opposite supply zone. So hinder your buys. Then you can buy. As long as there is no opposite supply zone to invalidate it. You guys should just drop your questions in the question group. I got caught out again. Okay. So I don't have any other breaking out. So any other question, just drop it in the question group and tag me or any of the admins.